the housing market is structurally broken, and today I will show you the exact data proving the rich are buying while you are being priced out. Now, before we tear into the data, a quick reminder. This explainer is strictly educational macro analysis. It's not financial advice. Investing always involves risk of loss, right? Look, if you're blindly deploying capital based on hope, well, you're already the exit liquidity. You think high interest rates are stopping the market, but the truth is, luxury cash buyers are at an all-time high, fueled by a literally record-breaking stock market. So, you're going to want to stick around until the very end because I am going to reveal the exact Florida supply shock that is about to crush over-leveraged Airbnb owners. All right, Section 1, the ground truth and the luxury floor. Let's establish the ground truth here. We are witnessing a massive tale of two markets, driven entirely by the wealth migration effect. Think of it like a concert, okay? The front row seats are completely sold out to people walking in with cold, hard cash. Meanwhile, everyone else, they're fighting for a spot in the back, but they can't even afford the parking. These luxury buyers are completely insulated from the friction that's suffocating the everyday retail buyer. Just look at this number. Almost 34% of homes in early 2025 were bought entirely in cash. 34%. That's because record stock market highs are being liquidated and cemented straight into hard assets. The upper echelon is literally bypassing credit markets entirely. And you've got to notice this massive disconnect. Luxury home prices grew at 7.6%, just completely ignoring the 7.04% 30-year fixed mortgage rate. This creates what we call a luxury floor, a price floor the average buyer just cannot reach. Because let's be real, the cost of borrowing means absolutely nothing to someone who doesn't need to borrow in the first place. Moving right along to Section 2, informational asymmetry. We're talking dark pools versus lit markets. There's this extreme informational asymmetry happening right under retail's nose. Public markets, the lit markets, they look at high mortgage rates and see a total housing freeze. But institutional dark pools, they are aggressively looking at those surging cash offer percentages. While retail is out there trading on headline panic, smart money is quietly executing off-exchange block trades. Therefore, elite allocators are executing a stealth pivot. They are literally dumping entry-level builders and hoarding the luxury developers, who simply aren't sensitive to rate hikes. They recognize a hard truth. The entry-level consumer is dead in the water. Here's the friction. Entry-level builders are being forced into massive mortgage buy-downs just to move inventory, and that is absolutely crushing their margins down to 15%. But luxury builders, they don't need buy-downs. Their margins are perfectly intact. The volume specialists are bleeding out right now, while high-end developers are just printing cash. This whole situation creates extreme adverse selection. Listen, if you are relying on public, lit exchanges for your price signals, you're already 6 months behind the tape. Think about it. The only people selling right now are forced to liquidate, and the only buyers stepping in have limitless liquidity. It is a completely rigged dynamic from the jump. Okay, Section 3, the macro impact. Let's talk about the capital gains trap. So the crucial point is how this structural rot actually paralyzes inventory through what we call the capital gains trap. Take homeowners who bought 40 years ago. They're completely locked in. If they sell, they don't just lose their sweet 3% mortgage, they face a massive tax bill they simply cannot afford. Why? Because that $500,000 tax exclusion limit hasn't been updated since 1997. Downsizing is mathematically impossible for them. But this creates a permanent supply shortage. It forces prices to stay artificially high, even as demand from regular, mortgage-dependent people totally collapses. It's this toxic equilibrium where sellers refuse to take the tax hit and buyers are just getting choked out by rates. To put that into perspective, moving from a 3% to a 7% mortgage creates a literal $1,200 a month penalty just for moving. It's like bolting the musical chairs directly to the floor. This demographic gridlock means the affordable homes you actually want to buy, they're never hitting the market. Which brings us to our massive data reveal in Section 4, the ultimate payoff, the Florida correction. While the rest of the nation's inventory is basically gridlocked, the Florida short-term rental bubble is finally bursting in a violent, systemic reset. Across the Sunbelt, supply is completely outpacing demand. Look at these numbers. Airbnb active listings are surging 92.9% in Cape Coral and literally 100% in Punta Gorda. Retail investors bought at the absolute peak, thinking pandemic-era migration was permanent. Spoiler alert, it wasn't. But without deep-pocketed northern buyers to bail them out, this market faces a devastating triple threat that is systematically liquefying equity. We're not just talking about a slowdown here. This is a highly localized capitulation event. First threat, homeowners' insurance has soared 400% since 2021. That turns once profitable Airbnbs into a brutal, inescapable monthly cash bleed. When your carrying costs quadruple overnight, your projected yields drop straight to zero. No way around it. Second threat, the condo catastrophe. Thanks to new laws, like mandatory structural inspections and 100% reserve funding requirements, condo owners are getting hit with massive special assessments. We're talking up to $150,000 per unit. It's this massive exogenous regulatory shock that's practically forcing mom-and-pop investors into panic selling. Therefore, with occupancy cratering down to 34%, all that inventory is flooding right back onto the market. This is pushing Florida to the #2 spot nationwide for foreclosure pressure. Look, the math does not lie. These properties are structurally underwater, and those institutional dark pools we talked about earlier, they saw this coming a mile away. In a financial system where the top 1% are using their stock gains to buy up the earth, what is the actual price of a family home? Hit the like button, subscribe to the channel, and drop a comment below with your specific thoughts on the tickers mentioned in today's breakdown.